Greetings, members, one and all of the Salivation Nation. $26 silver, $2,000 gold. Here we go. Let's explore. We get so close oftentimes, and we get so pumped up and psyched up when prices climb for gold and silver. We think they're just on the cusp of breaking out, but they never do. They tend to go back and they fall back, and that's what happened today. Gold and silver reached, I think gold very briefly. We look at this chart here. We can see that earlier it touched $2,000 an ounce. Now, this is the bid price. So just for a brief amount of time, and the ask price, it did go over $3,000. Silver definitely breached the $26 level earlier in the day. We can see it up to almost $26.30 there for the bid price, definitely in the ask price. Nonetheless, they scaled back a bit today. Let's take a look at some of the reasons why, and from some of the legacy media or the mainstream media. And the Market Watch is probably considered one of those outlets here, with some of the reasoning they use, little infiltrations of bits and pieces here and there. We want to be too critical of them, but I think it's warranted in some cases here. Gold futures rose Monday as U.S. traders returned from a 3-day weekend with little prospect for a quick end to Russia's invasion of Ukraine instead of contributing to global inflation, supporting haven demand for the precious metal and lifting prices to their highest finish in more than 5 weeks. So yes, I guess one could say that it's contributing to a degree, but it's almost like they're minimizing the actual fault of inflation. We cannot blame Russia or Ukraine or what's going on there completely on it. There's factors, but the biggest factor involved, the biggest driver of inflation is easy monetary policy, modern monetary theory, quantitative easing ad nauseum over and over again. And that is the sole cause. Now, obviously, supply chain issues and high fuel costs, which, by the way, those high gas prices have been around longer than the troops have been amassing on the border of Ukraine even. And the high gas prices have been going on, really exacerbated by the shutdown of the pipelines and some of the domestic drilling that had been going on before Biden stepped into office. Now, the article continues, gold directly benefits from the Russia-Ukraine conflict inflation effects, which are now more meaningful than direct military developments. In a market sense, said Stephen Hines, managing partner at SBI Asset Management, in a daily note. These consequences have fabricated a hyperinflationary environment that sees gold investors stocking up on paper and the physical metal for the eventual procession to recession. And yes, and again, this is more analysis which tries to minimize or sidestep the underlying cause of inflation here, as I just said there before. But make no mistake, war and the uncertainty of war is something that is settling in with folks and is having an impact on the prices for gold and silver. And that is kind of what's here. What's not mentioned here is the dollar index. And I think that is what's going to essentially push these prices back down again sooner or later. Gold for June delivery climbed, and it settled at $1986.40 an ounce at the COMEX after touching a high of $2,003 today. The settlement was the highest for a most active contract since the 10th of March, when prices ended at a roughly 19-month high of $2,000.40, according to Dow Jones market data. Prices rose 1.5% for last week's holiday-shortened week, and silver rose 45 cents and nearly 1.8% at $26.15 an ounce after last week's 3.5% gain. And we know the markets were closed on Good Friday. Apparent Russian missile attacks rocked the western Ukraine city of Lviv Monday, killing at least 6 as the country prepared for an all-out Russian assault on eastern Ukraine. Ukrainian troops were holding out on the southeastern port city of Mariupol, which has been largely destroyed after rejecting Russian demands for surrender. Some say that 95% of that city is destroyed, physically destroyed. It's a pile of rubble. Ukraine is a reason for the gold price rise. Chintan Karnani, a director of research and Insignia Consultants, told Market Watch inflation will be around longer if Ukraine conflict continues to escalate, he said. Gold is often seen as a hedge against inflation. But again, even if the war were to stop tomorrow, inflation is not going to stop, and it's going to continue to rise. It's just exacerbated, just aggravating it a bit more. That's about it. Today's trading volumes were thin as the UK and most of Europe and parts of Asia were closed due to Easter Monday, he said. And I will say one other thing, because we're going to talk about another article here. I'll get into that momentarily about this. On a technical trading level, gold prices, meanwhile, have to top $2,000 on Tuesday and for the rest of the week in order to start another wave of rising prices. And now they've kind of crapped out. They've fallen fairly dramatically. As we look at the prices right now, we can see there that silver is now comfortably below $26 and was comfortably above just hours ago. Gold is comfortably below that $2,000 level, and it had just touched briefly earlier in the day as we reported. Now let's look at Reuters, and Reuters is definitely one of those news sources that typically tends to lean more towards the left, and it's reporting here. And gold rose to a 1-month high on Monday, just shy of the $2,000 an ounce level, but it did get up there a little bit here. And it's gold's advance was curbed late in a session by a jump in the benchmark 10-year U.S. Treasury yields and further gains in the dollar, which dulls the appetite for gold among overseas buyers. So there we go. So that was what happened later in the trading day. But again, the concerns around the Russia-Ukraine conflict and rising inflationary pressures increase safe haven bids for precious metals. And that is interesting phrasing there, because they're doing it. They're not conflating the two necessarily, which is kind of surprising for Reuters. They're saying that both things together, not necessarily tied to each other. And I think at this point, it's probably safe to say that with the sanctions tightening, there's not much more we can do on that end that's going to have a much more effect on inflation. Obviously, the crop yields for the spring is going to have a major impact, I guess, as far as food supply and the like. But again, all that stuff could be fixed and relatively quickly, I would think, if we just did some more domestic wheat production here and exported. We got a lot of farmland here in the United States and also in Canada as well, too. Those two countries alone could probably help supply some of that wheat. And nonetheless, so there it is. All right, a little step-up tension due to the Russia-Ukraine war with inflationary pressures across the board boost safe haven demand for gold, said David Meager, director of metals trading at High Ridge Futures. Concerns over the economic hit from COVID-led restrictions in China also supported the metal. Yes, indeed, we reported on that. And they're literally zero tolerance policy there. Shanghai completely shut down, a city of between 24 to 26 million people. Concerns for soaring inflation boost gold safe haven demand, appeal interest rate hikes to temper higher prices could hurt demand for the metal because of the higher opportunity cost for holding non-yielding bullion. And so I think in the short term that very well could be the case. The U.S. Federal Reserve is expected to accelerate its pace of policy tightening when it meets next with a rise of 50 basis points. That's a half a percentage point in May and the June meetings. I believe they will. From a technical perspective, spot gold may face a little resistance once it goes north of $2,000. However, gold's ability to keep its head above $2,000 may be strained once real yields break into positive territory. We saw some evidence of that today. And indeed, so there's where it is. So a lot of things working for and against gold and silver, and that is part of the nature of the beast. And platinum and palladium, though, have held on to some pretty strong gains here, with palladium with over 3% rise and platinum over 2% rise to $1,021 for platinum. Makes me glad I bought the platinum I did when I did. And some of this very well could be the effects of what I reported on well over a week ago now about the LPPA, that's the Latin Platinum, or the London Platinum and Palladium Association, prohibiting trade of Russian platinum and palladium. So what was already in the coffers there was allowed to stay. Anything new it was stopped, and so this is, I think, a result of that. So there's where we are at with gold and silver. Pretty amazing to see the metals take this move up and then kind of get pulled back. And the reason why the pullback today is mentioned here is an article from Reuters, kind of touched on it there. And 10-year treasury yields and further gains in the dollar. And that's just it. The dollar is a force to be reckoned with, folks. And it's an unpopular opinion in this community, but it's not going down without a fight, because it is the top world's reserve currency. And what little that Russia has to do with accepting only payment rubles is not going to have that much effect to the dollar. And even with what China is doing, everything like that's happening there, it's going to take a while, folks, for the dollar's threat of the world top reserve currency to really have an effect on the dollar's case there. It's the best in all the currencies out there. We know that our policymakers are doing exactly the wrong thing, but they have the luxury of doing so because of the strength of the dollar. Pretty amazing when you think about it. Does that mean we should just give up on gold and silver? Heck to the no. We continue to stack on, and I encourage you to do that, because what has lasted a lot longer than a dollar? It is indeed silver and gold. So I hope you found this video insightful. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please snap to it again, share this video, and subscribe.